听见资本本期视频为您带来的是摩根士丹利亚州在4月10日闭门会，从宏观视角看待关税政策对亚洲经济体的影响。最近的贸易局势风云突变，特别是围绕关税的各种消息，给全球经济尤其是亚洲市场带来了巨大的不确定性。如果你关心自己的投资，或者你的业务和亚洲经济息息相关，那接下来的内容你一定要听仔细了。首先，中国经济正面临关税带来的直接冲击。专家们分析，这波关税可能直接削减中国 GDP 增长 1.5到2个百分点，这绝不是一个小数字。影响不仅来自直接贸易减少，更可怕的是它可能加剧国内的通缩压力，抑制消费和投资。虽然中国政府会推出刺激政策，但专家警告，这些政策可能不足以完全抵消冲击，经济增长仍面临下行风险。而且别指望通过谈判能轻易降低这些关税，它们可能会持续很长时间。人民币会贬值吗？可能会，但会是有控制的。别指望它成为对抗关税的主要武器。对于投资者来说，市场波动性正在急剧增加。专家建议现在要采取更平衡的投资策略，增加对防御性板块和 A 股的关注，因为 A 股受地缘政治影响相对较小，高科技股的风险在加大，而一些国内驱动有稳定分红的板块，比如公用事业，可能更具吸引力。虽然市场估值看起来不算太高，但盈利前景的不确定性也在增加，企业可能会因为担忧而缩减投资。再看日本，情况似乎稍微好一些，虽然也面临关税压力，但日本似乎更有机会和美国达成某种协议，降低部分关税。国内的工资增长和可能放缓的通胀为消费提供了一些支撑，但别高兴太早，美中紧张关系带来的全球风险依然存在。日本央行也陷入两难，虽然之前市场预期多次加息，但现在看来，即便今年加息一次，可能也就是终点了，未来的加息空间非常有限。放眼整个亚洲，最大的问题就是不确定性。这种不确定性正在打击企业信心，影响投资和贸易，几乎所有亚洲经济体都受到波及。专家预测，除了中国可能更依赖财政刺激外，亚洲其他地区的央行可能会被迫采取更多降息措施来应对经济下行压力。韩国尤其需要关注，如果关税问题恶化，韩国央行降息力度可能超出预期。总而言之，未来一段时间，亚洲经济和市场将持续笼罩在贸易紧张和政策博弈的阴影之下，风险和机遇并存，但风险显然在增加。接下来是英文会议的全部内容。如果您需要我的投研助理人工加 AI 辅助校对的中文文本，您可以在频道的 Patreon 上获取。
Hi, good morning, everyone. It's April 10th, Thursday. Welcome to Morgan Stanley's Asia Macro Webcast. My name is Derek Gum, and I'm the Asia economist and also your moderator for today. And so what we're going to discuss today is really about the developments overnight on the pause in the reciprocal tariffs and what its implications are, as well as also sort of think about what are some of the things that we have sort of been looking out for in terms of deals, in terms of potential policy response around the region as well. And we're going to start off the discussion with our China economics team and also the strategy team as well to first talk about China. Before then, we will sort of move to Yamaguchi-san on Japan. So I think, Chepang, let me just very quickly start off with you. I mean, at the end of the day, you know, what we have had the announcements over the last 12 hours or so is basically that, you know, the tariffs on China are still staying in place, right? So what are you thinking in terms of how this will sort of have an implications on the Chinese economy? We also note that there are lots of discussions about sort of like potential stimulus plans as well, whether there will be a step up in fiscal easing. And also sort of maybe your assessment on sort of how you think about, you know, the potential or the contours of the deal and sort of how you see things moving forward. Chepang, over to you.
Thanks, Derek. What a day or what a night. But the tariffs on China remains, and it's even going higher to 125%. So it's still going to be a larger than expected shock to Chinese economy. So in this webcast, I'm going to talk about the tariff impact, how we think about it, the future direction of travel for the tariffs, our growth forecast and attendant risks, and finally, China's policy response. First, on tariff impact, we think, you know, the announcement year to date is probably going to knock 1.5 to 2 percentage point of GDP on Chinese economy. There are two channels. Number one is the trade-related channels. Number two is the secondary impact on domestic consumption and investment. Now, within this trade channel, our estimate is that the impact will be 1 to 1.5 percentage point of GDP, and it consists of three sub-channels. Number one, or A, a direct exposure to the US. Right now, with this 125% tariff, we're really tapping into uncharted waters. So it's kind of difficult to really have a very precise estimate of the direct impact, but I think a fair estimate is that the U.S.-China direct trade will be halved. That is a 50% drop in the Chinese exports to the U.S. And that is probably going to be having a 0.8 to 1 percentage point in China's GDP. So that's subcomponent A of the trade channel. B, we have supply chain trade, particularly after 2018, and China's factories, set up offshore subsidiaries, particularly in Vietnam and some other ASEAN economies, basically exporting a lot of the intermediate inputs to these economies, who then, process it, turn them into final products, and then export to the U.S. So this supply chain channel is also quite important. And finally, subcomponent number C is, of course, slower overall global demand, which can also weigh on China's exports. But on that front, there's a lot of uncertainty, as we saw overnight. So that's on the trade channel. Our range estimate will be 1 to 1.5% of the GDP. And then there will be the secondary impact on domestic consumption and investment. We think this tariff shock is a deflationary shock to China. And given the starting point of the economy that we are already in a deflation, that can also have quite visible impact on domestic activity. The capacity utilization ratio will be facing more pressures and causing more pressures to basically have more adjustment on the supply side, reducing investment. But then again, current investment is also a part of the current demand that can also exacerbate these deflationary pressures, keeping all these loops alive. So these secondary impact we have in our estimate is probably also going to have a 0.5 percentage point or higher, in terms of the secondary knock-on impact on China's economy. So overall, it's probably going to be 1.5 to 2%. But of course, the latest development overnight affirms that probably the one sure thing right now is uncertainty. And it suggests that with a détente in the global trade escalation, the above range estimate, if we were to have a point estimate, it's probably going to be closer to the lower end of the range estimate than the upper end. So that's our evaluation of the tariff impact. In terms of future direction of travel for the negotiations, etc., our house view is that it's going to be quite difficult to negotiate down the U.S.-China bilateral tariffs compared with other economies. First of all, right now the two sides still remain in an escalatory cycle. So if it is likely that these very high tariffs can remain for quite some time. And then in a longer term, I think all these U.S. tariffs towards China is probably not just about negotiation tactics, but also reflects the strategic thinking on the U.S. part in terms of national security, in terms of really bring back some of the manufacturing to the U.S. So we think, these very elevated or hefty tariffs between the two countries can be quite sticky. And finally, in terms of the impact on our growth forecast, let me share my screen. So this waterfall chart basically shows that how we are going to be traveling from 2024 growth of 5% towards the 2025 GDP forecast. In the first orange bar, we have a weaker underlying momentum, basically reflecting that even without the tariffs, China will be stuck in a deflationary loop. Hence, with the slower potential growth and the deflationary pressures, underlying momentum will be probably weaker, will drive a weaker GDP growth. And then there will be the tariff impact via trade and the secondary impact. Then, of course, will be the existing stimulus announced by the MPC. We think that can probably offset some of this tariff impact as well as the weaker underlying momentum, but it is probably not going to be sufficient to basically keep growth above 4%. And in this sense, we need additional stimulus, and the market is expecting more stimulus from Chinese policymakers, possibly from the second half. But what do we expect in terms of policy from here onwards? I think the first step is still about front-loading a lot of these stimulus measures that has been announced or pre-approved in the MPC. And these include like faster rollout of local construction bonds and some earlier than expected monetary easing. Also, they may expand the ongoing consumer subsidies to more goods and possibly services to basically fully utilize this 300 billion consumer goods trade-in program. And they also probably can bring forward the national fertility subsidies, which is being considered and studied by the top leadership. So these are what we expect in the second quarter, which is about bringing forward a lot of the stimulus measures that was previously planned for the second half. And then in the second half, we still think that a fiscal expansion is possible. The amount is probably going to be 1 trillion RMB to further offset some of these tariff impact that we didn't, or the market did not expect. The government can also maybe bring forward some of this central local government debt swap program, the quota from future years to current to 2025 to facilitate more infrastructure investment. Finally, they may, improve this social welfare program in China on the margin as well. So these will be what we're looking for in the second half of 2025. But overall, we think policymakers remain in a reactive mode, and they are probably not going to be fully offset the tariff impact. And as a result, our current 4.5% growth forecast is facing some downward pressure or downside risk, probably between 0.2 to 0.5 percentage point. Yeah. With that, let me hand it back to Derek.
Yeah, thanks a lot, Chepang. I think with that backdrop, I want to turn the conversation over to Chloe as well. So for Chloe, I think one of the key instances would be that, if we have to think about, all the issues that we've sort of been, in terms of thinking about, let's say, the equity market outlook, where we have had sort of like the stimulus, right? We have also had sort of like, company-specific developments in the space of AI, right? And then you also had sort of now these external headwinds in the form of tariffs and also trade tensions. So if I had to sort of take a stance on sort of the market, where would you sort of be asking investors to think about, to take positions in, or how would you expect them to be positioned? And also sort of like, is there any sort of interesting sort of things that are happening in the market right now that is capturing your attention? Chloe, over to you.
Yeah, sure. Thank you, Derek. So all the back and forth and also chaos on the tariff brings a lot of volatility to the market. And we see the latest development of the pausing tariff implication for 19 days for almost all the countries except China, put China in a more challenging situation. So our general view here is that we suggest a more balanced portfolio with a higher exposure to the defensive names and also the A-share large cap names. For the A-share, we think the market is less volatile than the offshore market because most of the A-share investors, they are less sensitive to these geopolitical changes because of their retail nature and also their limited access to the offshore market. And historically, we see the A-share market has the lowest correlation with the global market. And in the meantime, we also suggested to stay nimble and monitor the potential US-China talk and also the step up in the China's easing. So for our focus list stock recommendations, today we take out 2 IT-related names, GDS and Beitu, given they have very high volatility. And we add 1 liquor name, Maotai, and 1 utilities name, CR Power. So for Maotai, this one is the largest component of CSI 300 index. It could benefit from the active national teams buying recently, and also it could benefit from the potential domestic consumption stimulus, which could see accelerated rollout in the second quarter. And for CR Power, the company has 5% dividend yield with high visibility and very low beta. And if we look at the sector performance back into the trade war in 2018 and 19, utilities is one of the sectors that could outperform, given it's pure domestic driven and it has high dividend yield with low beta. And to reflect these focusness changes, we upgrade consumer staples to eco-weight and downgrade IT to eco-weight. I will also talk about the valuation and earnings trend recently. So if we look at the MSCI China valuation, it's standing at 9.5 times forward PE right now. This is almost the same valuation with last September before the policy pivot. And investors are asking how is this valuation looks at comparing to the previous low levels. So the most recent trough level in October 2022 and early 2024 was around 8 times PE. So this could be an absolute support level to MSCI China. And some investors are asking how does this compare with the previous global crisis levels, like the global financial crisis in 2008 and also the European debt crisis in 2011. At that time, MSCI China is trading at 6 to 7 times PE. However, we want to highlight that currently the recession call is not in our base case. And for the earnings trend, the MSCI China, the 4Q earnings delivered the first in-line results after 3.5 years of miss. And among the sectors, we see consumer discretionary, communication services, and financials posted very solid results. We think this is a direct result of the aggressively cut off earnings estimates in previous few years, and also corporate self-help efforts, and also the acceleration of the AI and tech investment and adoption, etc. However, the tariff tension could put more uncertainty on the earnings outlook. With the macro uncertainty globally, corporates could scale back the CapEx investment, and also the domestic deflationary pressure could increase if the external demand slows down. So as a result, we see the downside risk to our base case of earnings growth outlook for 2025. But any major scale back of the tariff and also Chinese government fiscal policy step up will be the key to watch. With that, I will stop here and pass it back to Derek.
Yep, thanks a lot, Chloe. Let me just turn the attention maybe perhaps over to Japan and over to you, Yamaguchi-san. I think, again, similar to sort of what we've sort of experienced in China as well, right? There are multiple things that we are sort of thinking about in the context of Japan. One is obviously sort of like, weaker US growth and also sort of like the impact on tariffs. There's obviously the BOJ outlook to sort of consider as well, which is a major issue for the Japanese markets. But also we also have the wage growth context that we've sort of been operating with, right? So can you let the audience know sort of how you're thinking about sort of how these issues are interplaying and acting out, and also perhaps, your latest thoughts on the BOJ outlook? Yamaguchi-san, please.
Thank you, Derek, and thank you everyone for joining the webcast. I think President Trump's announcement, lowered the risk of Japan's sharp deceleration. I think there used to be a risk of global recession and also U.S. recession. But I think announcement reduce the risk at least in the near term. And from the Japan's viewpoint, the U.S. had announced that they would impose 24% reciprocal tariffs, but that would be reduced to 10% for the next 90 days. But Prime Minister Ishiba called President Trump, and they had a phone conversation. And after the conversation, U.S. Treasury Secretary Bessent said that Japan will be prioritized in terms of the trade talks. And I think this Japanese administration has strong political incentive to reach a deal ahead of the July upper house election. So I think there's a reasonable chance of the Japanese government and the U.S. government reaching a deal during this 90-day period window. So we think that the reciprocal tariffs on Japan, 24%, would likely be permanently reduced to 10%, and that will be positive for Japan. That said, we still see downside risks to Japan's growth, mainly on the export sector. I think the higher tensions between the U.S. and China, I think would pose a significant, downside risk to the, global growth. Also, U.S. will likely maintain 25% auto tariffs, and also, tariffs on steel, aluminium, and also, 10% universal tariff will remain in place. So that is clearly, a downside risk to Japan's GDP growth going ahead. So in terms of domestic demand component, we have a relatively optimistic stance. As Derek said, that spring wage negotiations this year was pretty strong. There may be some risk of 25% old tariff adversely affecting wage negotiations in the April-June quarter among smaller companies, but we don't expect a sharp deceleration in wage growth. At the same time, the headline inflation is now suffering from cost-push inflation, but I think lower oil prices, stronger yen, and probably an increase in cheaper imports from China will likely reduce Japan's headline inflation, and that will be actually positive for consumption in terms of improving real wages or real purchasing power. So overall, I think we, as an economist viewpoint, I think domestic demand will likely remain resilient. And finally, on the BOJ, I think after the announcement of the reciprocal tariffs, I think the market priced out the possibility of a rate hike this year. And we also, saw the risk. But after, President Trump's announcement yesterday, I think now there's some possibility of BOJ going ahead with a rate hike again. And in fact, actually, our base case remains a rate hike in September with some risk of a July move. Of course, that would depend on the economic data and the yen. But if I think the Japanese government reach a deal with the U.S. government, by the end of June, and if the data remains solid, I think there's a reasonable chance of the BOJ moving ahead with a rate hike from 0.5% to 0.75%, either in September or July. That said, I think after that, I think the market used to price in higher terminal rate beyond 1% or even 1.5%. But we don't think BOJ will continue to raise interest rates beyond 0.75%. So we think that the next rate hike, if that happens, I think that will be the last rate hike during our forecast horizon up to 2026. So I'll stop here and back to Derek. Thank you.
Yeah, thanks a lot, Yamaguchi-san. Kathleen, I want to bring you in. All right, thank you very much, Kathleen, and also thank you to the speakers earlier on. I thought I would just offer 3 observations on the regional level. I think number one is that, with this sort of back and forth on all the tariff headlines, I think, Chepang alluded to this, it's still very clear that uncertainty is still going to be remaining with us. And as we've sort of been highlighting in our written work, that, the biggest source of the growth pressures will likely come from the uncertainty channel, which is the uncertainty weighs on corporate confidence, affecting capex, affecting trade, and so therefore brings about the spillover effects to almost all of the Asian economies. And so one of the things that we've sort of been highlighting as well is that we need to think about the exposure via sort of like the trade angle, i.e. the more trade-oriented you are, the more likely the bigger the growth impact will be. The second issue is on the deals. We do sort of highlight that, for a lot of the Asian economies, it may be quite difficult or somewhat challenging to get a deal. Japan, Korea, India, of which Japan and Korea we've already discussed on this call, appears to us to be sort of like where it could be sort of easier on a relative basis to actually get a deal. But at the same time, I think after this pause, it's not immediately clear to us that, when you get a deal, you may actually get tariff relief, right? So what we take reference from is essentially from the phase 1 trade deal with China back in 2020, which is that, there was actually a list of goods on which tariffs were halved, and also that there was one round of scheduled increases in tariffs which did not go ahead. So there was sort of no immediate full tariff relief during that time period. And again, like I said, it's not clear to us exactly what may happen this time around, even when the deals are being signed. Now, the third thing is, so therefore, that as long as this period of uncertainty sort of is with us, we do think that the growth pressures will stay with us for some time. And so therefore, from a monetary or fiscal policy perspective, we do see sort of more easing that will be coming. For China, probably becoming more from the fiscal easing side, but for Asia ex China, it will probably come more from the monetary policy side of things, which has to do the heavy lifting. We do see more rate cuts that are coming in our base case, with the risk that there could be even more rate cuts than what we currently expect. So with that concludes the presentation part of the webcast. I wanted to quickly ask a couple of questions to the speakers today. I think, Chepang, I want to start off with you first, which is that, as you think about, let's say, for example, a few issues that are at play, right? One is, of course, are there any potential signposts that you will watch for a potential de-escalation in trade tensions? The second thing is, I think that's come up is really in the conversation in discussion is really about the outlook for the RMB. There's a lot of focus on whether China will sort of be using the RMB depreciation as a sort of potential way to sort of offer some relief on the tariffs itself. And then I think the third issue is probably on sort of like the potential timeline for the next policy action that you will be expecting. So those three things, I think, in focus for you, Chepang.
Thanks, Derek. Difficult question, particularly number one, because as I mentioned, our overall view on the U.S. and China bilateral negotiation is that it's going to be difficult. The bar will be high. And it's probably even more difficult considering that a lot of the decision is probably made by the very top leadership. In this sense, there's probably not going to be a lot of bottom-up evidence regarding whether a meeting will be upcoming. So for that, I really don't have a good answer regarding the signpost of any potential bilateral negotiations or meetings, unfortunately. And number two, on RMB, we think what we observed in the last couple of days is that the PBOC is easing on its control on the RMB fixing. It led this fixing for USD-CNY to be higher, marginally higher over the last 3 or 4 days, signaling that with a larger than expected growth shock from tariffs, PBOC is willing to also shift a little bit in its ongoing policy framework or the trade-off that it perceives. Previously, it's about prioritizing currency stability over domestic monetary or liquidity easing. But right now, the balance has changed a little bit. We think PBOC is willing to let the currency depreciate a little bit in a measured, controlled manner, and in exchange offering some room for domestic liquidity easing and possibly upcoming monetary easing. I think that's the rationale for RMB. Instead of letting RMB to be a weapon or as a main absorber of this tariff shock, no, because the tariff is too large and it's never going to be no realistic depreciation can offset the tariffs. So that's on question number two. We back to the year-end forecast on the USD-CNY. Our current forecast is 7.5. Now with this bigger than expected tariffs, we do see some upside risk in this forecast. But still, even though PBOC is going to be allowing a depreciation, it's going to be conducted in a measured manner instead of very sharp one-offs. And finally, the question was on, Derek, can you remind me?
Yeah, it was on sort of like the next timeline for when do you expect policy actions?
I think there are a lot of market rumors right now regarding whether there's going to be an upcoming joint press conference between different ministries from the Chinese policymakers. And also there's rumors about whether this Politburo meeting at the end of the month will be bring forward. We don't have any clear evidence or conviction on these rumors or speculations. But I think the next policy move, according to the slight change in PBOC's stance towards currency, is that maybe some monetary easing will be upcoming, whether in the form of a modest policy rate cut or triple R cut. And then, of course, everybody will be focusing on the end of the month, Politburo meeting, which is usually what they have, after witnessing the first quarter GDP data. In that meeting, whether the policymakers will announce additional stimulus on top of the MPC's package, probably not. In fact, Premier Li Qiang said yesterday in a consultation meeting with a lot of these industry experts and scholars. And the remarks he had was that China will front-load a lot of the policy easing as determined by the MPC, but will basically have a discretionary stance in terms of upcoming policies. If growth slows down, they will roll out additional policy. And in this sense, given that the first quarter GDP is tracking very robust, I think at the end of this end April Politburo meeting, the chance for announcing additional fiscal stimulus is relatively low. Yeah, I'll stop here.
All right, thanks, Chepang. Very clear. Chloe, maybe two questions for you. One is that I think as we were alluding to sort of like the RMB, right? So how do you think sort of like the RMB evolution, whether it's depreciating or depreciating or not, and maybe perhaps the extent of the depreciation, how does that sort of generally affect the markets? Is it a good thing for equity markets, or is it not necessarily a good thing for equity markets, right? So that's question number one. The second thing is sort of around investors' sort of feedback, what the consensus view amongst investors is. Would you sort of say that right now, universally, what are investors thinking about? Are they sort of generally bullish, generally sort of like concerned about tariffs, or what's on the top of the minds in terms of on investors' mind in terms of how in your conversations with them, Chloe?
Sure. I think on the first question, so generally the RMB depreciation is negative to the Chinese offshore market, including like the MSCI China and also the Hang Seng Index. This is because most of the offshore investors, their dominated currency is from US dollar. So if the renminbi depreciates, this will have a negative impact to their US dollar dominated return. But for the A-share, I think the A-share is less sensitive to the renminbi depreciation, etc. And also if we have the renminbi depreciation, that will help the export a little bit, then that may help to support the economy a little bit in terms of the A-share market. And secondly, on the investor feedback, I think generally people are more conservative, and they will watch for stand on the sidelines at this moment because we still have a lot of uncertainties looking forward. And I think for China, I think people do think that the bar for China to reach a deal with the US is much higher compared to the other countries. And I think recently people are starting to look at more domestic oriented names, including the consumption and also maybe some property related and also infrastructure related names to play the potential stimulus from the government. And also I think some people are also playing on the localization themes, like the localization semi names, etc. And also another thing is that given people are turning more defensive, they are also more willing to add on the high dividend yield names like the banks, telecom, and utilities, etc. Yeah. So overall, I think people are trying to become more conservative and need to wait more catalyst before they turn more positive at this moment.
Yeah, thanks a lot, Chloe. Yamaguchi-san, a question for you on the BOJ outlook, right? I mean, right now, I think the BOJ has a difficult task because it has to balance so many things, right? But if you sort of had to think about how the BOJ is going to think about these issues, do you think that the external headwinds or the external factors such as the tariffs will play a much more important role in how they're going to decide? Or do you think that they will pay even more attention to sort of domestic considerations? What will sort of likely take a bigger weight in terms of their assessment of the outlook and also more importantly their decision?
I think their view is that domestic demand is okay. They just revise up their private consumption estimate. Also, I think wage negotiations so far have been relatively solid. And today we had March producer price index, which was still elevated at 4.2%. So from a domestic viewpoint, I think they were trying to raise interest rates early. But the issue was the uncertainty about external demand, and this will not likely go away in the short run. So in the near term, I think they have no choice but to wait and see, maintain the wait and see mode. But once, for example, the Japanese government reach a deal with the U.S. government, and if domestic data remains solid, then I think they will likely go ahead with at least one rate hike in the July September quarter. I think they have also probably incentive to increase the margin above 0%. I mean, now the short-term policy rate is only 0.5%, dangerously close to the zero lower bound. And so I think there may be some incentive to raise interest rates when they can to prepare for the next downturn. That may be another reason why they are kind of proactive in terms of rate hikes.
Thank you, Yamaguchi-san. Kathleen, I guess a similar question to you on Korea and BOK. Earlier you mentioned that sort of you expect sort of the BOK to get to 2%, because of and sort of go below neutral. Is there anything that might make you think that maybe they don't get to 2%, or maybe they might even go lower than 2%? What is going to be the key factor in deciding the rate path from here?
Yeah. Thanks, Derek. Ultimately, it will have to be the growth outlook from the BOK onto the economy and how the tariff would affect the growth outlook from here. So right now, they're looking at this year's growth at 1.5%. We've lowered it to 1.2%, flagging the additional risks of around 30 to 40 basis point if the reciprocal tariff at 25% would stay. Right now, next week's MPC, I'm waiting to hear how the BOK sees the developments so far. And by the May meeting where they have to present the quarterly growth outlook forecast, I would expect them to lower their growth and also turn a lot more dovish in terms of their room to accommodate the economy with their policy rate. For me, of course, high uncertainty still prolongs, but of course, the developments with the reciprocal tariff, whether this pause will continue on after 90 days or with the return, that would be a key factor. But right now, I would think their growth outlook will deteriorate further as we go on with this prolonged period of tariff conflict. Even if it's just between the U.S. and China, we still do think that global growth outlook does face a downward pressure from that, and also the uncertainty factor still puts the downturn on potentially the global capex cycle that could turn back to the Korean exports and cause the BOK to turn even more bearish. So for us, still very highly uncertain environment. But if the reciprocal tariffs, let's say, come back after 90 days, then I would think the BOK would be highly alerted to go even lower than 2% to support the economy based on their growth outlook, potentially going a lot lower than where they are now at 1.5%.
Got it. That was very clear, Kathleen. And we just crossed the 45-minute mark, so we would like to bring today's webcast to a conclusion. Thank you very much to all the speakers. But more importantly, thank you to everyone in the audience who is joining us today.